To Summit Sunrise. I got to tell you, it's a good thing Michael Hornback from Eagle Insurance Agency and yours truly are sexy, because we're going to be talking about something that's not sexy, but it's very, very important. We're going to be talking about life insurance policies, right?
Yes, I wanted to continue our conversation that we've had over the last few weeks about this tax-free retirement, and that the infrastructure or the form that is used to take advantage of this is a life insurance policy. Yeah. And basically, I think what happened whenever IRS Code 7202 was implemented into law, I don't know when that was, but it was designed so that the law became effective so that people didn't pay income tax on borrowed money.
It's like a mortgage or
a car, or, well, and there must have been a lobbyist somewhere from the insurance industry who got in there and said, look, if we're not going to pay taxes on borrowed money, then let's include a life insurance policy, the kind that has cash value. Cash value life insurance policies provide policy loans, and so those are tax-free too. And this all kind of got incorporated into that code, and I can just kind of see the finagling going on. But it turned out to be a good thing for people, because going back to a prior conversation, the ideal of the IRA, the 401k, and deferring taxes to later is not going to work anymore, because the taxes later are going to be higher, not lower. So it makes this tax-free strategy using these policy loans. And if I can continue on here right now, the current interest rate environment, as we all know, is low. Right. So if you take a policy loan from your life insurance policy, first of all, whether you don't know this or not, you don't have to pay the loan back ever. Right. And if you die, the amount of the loan and the interest earned on the loan is taken out of your death benefit.
Now, let me stop you right there, and I'll tell you a real life scenario. I was thinking of buying a policy for myself, right? And but then I kind of shut because the thought of my wife spending if I get hit by a bus, her spending the benefits, like with her 26-year-old new Swedish husband, just gave me shudders. But that's the less reason to buy in a policy. It's the better reason is all these benefits for the owner of the policy that you're talking about right now.
Well, and what you've hit on right there is something that's different in the ideology here, because now you're buying a life insurance policy that you're going to benefit from the most. Right. If you do die, the beneficiary is going to get some money, and maybe they got a boyfriend or girlfriend or whatever. But
don't rub it in.
But
okay.
Now I forgot what I was saying.
Yeah, but the benefits of the policy, the person that owns the policy, Michael, the benefits far outweigh any sort of payoff at the end.
Well, the answer, I think, is that you're not worried about the amount of life insurance you're buying. You don't really, that's not the major concern. Normally when you buy life insurance, you're buying as much as you can for the least amount of premium, because you're going to leave it to somebody. But now you want to buy the least amount of life insurance for the more money that you can put in, so that you can build up that accumulation value, take out those policy loans, which will not be taxed, which you don't have to pay back. In this low interest rate environment, right now you can get policy loans for a 4% interest rate, and the policies are earning 8%. Well, figure that out. I mean, instead of you don't pay the loan back, but instead of the account going down, it's going up, because you're earning more interest than you're paying. And boy, I would sure like to sit down with you or anybody, put that on your birth date, put it in a computer, print this thing out, because it really is the answer for retirement. Even if the taxes weren't going up, I guess taxes going up is what brought this out, but we should have been doing it anyway.
You know what? And I'll tell you, I did this. I'm telling you, I did this myself, and have looked into it. And this is before I met Michael, and looked into it, and it pays dividends. It's just the flexibility of a life insurance policy. The life insurance, that's the smallest part of it. It's just what it can do. And if you want to learn more about this is intriguing. I'm telling you, this is firsthand. And also, you can put lump sums in it, rather than the stock market is as flat as my career. And you can put a lump sum in that gains sometimes up to 5-6%, up to 8% interest. So you're gonna call Michael. The number's on the screen, the website's on the screen, and he'll explain it. I know it's too much to go into 4 minutes, but this is intriguing. And just give him a call, and you can also lament about the University of Louisville losing.
Well, you know what? You can lament, or you can get some of that Grey Goose with some vanilla ice cream and La Cula, and then it all kind of goes away.
Of course it does.
And a week later, you know, you're waiting for next year.
Yeah, and you know what? And if other people drink that, we both look better. So there you have it. The numbers on the screen. Check it out. I'm telling you, this is something you want to look into. Whether you're young like Mike and I, or you're getting in your declining years, this is, and more importantly, if you're younger, this is just will pay dividends right down the road. So give them a call. We'll be back tomorrow, same time, same channel. Don't touch that dial. Still some Summit Sunrise yet to come, so don't go away.